What's going on, traders? Today is day number 10 of the $1,000 account challenge, and today I am up $57.06 or 4.1% of the total portfolio balance. If you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options in a cash account to see how far we can grow this account. Off of the day trade watch list today, we had Apple as a long idea above 198.5 for a move up into brand new all-time highs. We do get that move. We did not get as much follow through as I wanted. And so because of that, I wound up scaling in and out of this trade several times. So I want to talk about where I placed my trades, how I made the money that I did today, and how we navigated this kind of chop, if you will, that Apple presented after pressing up early in the morning. So off of the I'm going to move to the 1 minute time frame. Off of the 1 minute time frame, we get an opening rally on Apple that breaks 198.5 and pushes much higher, over $1 higher, up to 199.62. So from 198 to 199.62, $1.62 move right at the open. This for me is already screaming confirmation. I'm looking at this saying this is a breakout move. We're running into all-time highs. Let's go ahead and try to take this position long. So I was trading live with the team. I don't have typed alerts to show you today, but my thought process was this. I did not want to miss out on a bounce move up into a high of day run further. Because if this continued to run from here off of this opening push, I would have been left out of the trade if it continued to press higher. I didn't want to chase the move, so my thought process was when this dipped, I know that this is the first dip offered. I don't want to go in with too much size that doesn't afford me the ability to take on a lot of risk and then take a larger loss down to the trigger level. So at this time, when I'm taking my first entry, my risk amount down to the trigger looks like that, and my reward amount up to the high of day looks like that. And I normally don't take entries this high, right? With my amount of risk versus amount of reward, it's all skewed there. Too much risk, not enough reward. That's why I decided to mitigate my risk and size down and scale into this trade. So I take the initial entry on the pullback just because I wanted to get some skin in the game, right? Because we're not having confirmation here, and to mitigate risk. I add to the position as this dips further and we get a rally right back up. So at this time, I think we're up about 10 or 15%. I make the decision not to take my profits here because, again, I'm looking for that high of day press, right? I'm looking for that move higher. We get another pullback holding the same line of support. Another rally up again, I think slightly, maybe back to break even here, slightly green maybe, and then the pullback here, and I make the decision here to add one more time. The reason why is because now all of a sudden our reward amount from the bottom of this candle, and that's where I got my entry here, from the bottom of this candle up to the high of day looks more like that, and my risk off amount looks like this. So this is the real entry that I scaled in on that brought my average down far enough that allowed me to profit on this trade as it ran back up close to the high of day. So you might ask, well, Gates, if you knew that you were going to take this entry down here, why did you even take those first two entries over here? Because Apple had so much momentum at the open, right after the open at the beginning of the day, I did not want to miss a move higher. That is why I took those entries. But in an effort to minimize the amount of risk down that I was assuming, I was scaling in. So I was using small size to afford myself the ability to average and lower my cost basis as this pulled back. And that strategy did wind up working for me as we took our profits up here near the high of day, so close to the high of day, that being our point of resistance, near the high of day for about, 14% on that trade. Then we get a pullback back to this same area. So now all of a sudden I'm saying, okay, wait a minute. Apple's looking pretty good here. If we look at this on the 5 minute time frame, at this time in real time, it almost looks like a bull flag pattern, right? That's about to break out. So I was like, okay, this is kind of your fake out move up. Maybe we can go back in on this on another dip entry. And so we certainly did that. We're not giving up on the trade. We do get the pullback close to this prior support. So this is going to be your intraday support. This is going to be your pullback to that intraday support. We snipe another entry. Get the entry long here at the bottom of this candle after it starts to show a bounce off of that support, and wound up closing the position there for about a 13% gain. Now the move happened within 2 minutes, and had I actually sold on this candle, I probably would have made about I think it was up 15 to 18%, but I missed the sell on this one, wound up taking the profits there, and I did miss this larger move up. What happened was in real time, so we have our trend lines here. So we're going to ignore the 198.5 for right now. Our trend lines now, because we're seeing the intraday price action, we know we have resistance at or near the high of day. That's going to be our potential price target. And we know we have support down here at or near the low of these dips. So I snipe this entry and I get out just to secure profits, but I recognize this as a range. And I'm willing and ready to take the entry long on a break of this range, but I lost focus. I shifted my focus over to Amazon for a quick second, stopped looking at the Apple chart, and by the time I looked back, it was already up here. I didn't want to chase the move up. But again, that bull flag pattern on the 5-minute time frame, this looked like it was breaking out, right? Or starting that breakout with the run to the high of day. So mistakenly, this is kind of what cost me a little bit of these profits today. I took an entry on the first pullback here. A little bit of FOMO tied in on this entry, a little bit of bias. I was thinking that this was going to give us a high of day break, and maybe a little bit of a chased move, because my reward offered up to the high of day looks like that on that entry versus the amount of risk down to the support looks like that. So just a failed attempt here, I think, at a scaled in entry initially. What I should have done was stayed patient, wait for a retest of the top side of the range and taken my first entry here with a stop loss just below, maybe even averaged in here, and then I would have been much better off for the rally back up on this push. But I didn't do that. So a little bit of FOMO on the third entry, or the third trade rather. A little bit of FOMO on that trade, and just kind of jumping in too early here cost me. I did wind up scaling back in on this trade because, again, the support was down at the low, right? So scaled in to lower my cost basis. We do get a bounce off that support area, the rally back up, and we are near break even. I closed it out for about a 3% loss. So 14% gain on the first entries for Apple. It makes sense to take the entries here early because, again, we don't know that this is not going to continue to run. So this trade is fine. It's just a sniped entry here. I think that this trade is fine. The mistake for me was taking the chased entry up here. I should have been a bit more patient, waited for the pullback, taken my initial entry there, maybe scaled in down here, and then I would have made another 10 or 15% on this push, and instead of closing it for about a 3% loss. So 14% gain. I think we took a 13% gain and then about a 3% loss. So overall, over 20% gain here on Apple, but a lot of scaling in, a lot of scaling out. I think it's a great trade to analyze because you get to see how we're navigating a range, utilizing this high of day up here as a potential price target with our intraday lows or intraday dips as our support line / stop loss area. Press the like button for me if the video has helped you out. I hope that it has. If you haven't subscribed to the YouTube channel, also do that as well. It's the best way to support me in this type of work that I do as a creator. And we will continue on with this $1,000 account challenge. You know, we're very early into the beginning of this challenge. My goal here is to run it up to $250,000. In the past, I've ran 5K to 100K. I ran 1K to about 40K, wound up buying a duplex, ran 1K to about 50K, and just wound up stopping the challenge there. So I'm going to try to at least beat 50K this year. We'll see if we can get there, though. Thank you for watching. Take care and enjoy the rest of your day. Cheers.